Hi there traders, this is Steve Miley, the market chartist for FX Explained, and in today's edition we're going to take a look at all the risk currencies amongst the majors. So when we say risk currencies, we're talking about those commodity currencies, the currencies that do well when we're in a global risk on scenario. Risk on, remember, being when traders, investors are willing to take more risk because the outlook for the either national or the global economy is positive. So that is what we class as a risk on environment, particularly from a global standpoint, and that benefits the countries that do a lot of exporting, because if we have a risk on environment, then those currencies that the countries that are doing the exporting and thrive on the global economy doing well are going to do better. So amongst the major currencies, they also come under what we call the commodity currencies, the risk currencies, but also the dollar block. They happen to be the dollar block currencies as well. So because they are all dollars, so they're Australian dollar, the New Zealand dollar, and the Canadian dollar amongst the major global economic countries in here. So, but what we've seen in here over the last 24 hours, markets had already started to shift slightly to risk off early this week. We had this kind of dip in here, so we saw the Australian dollar dipping lower, but also the US dollar, which is now currently seen very much like a safe haven, is going up. So it's rallying, it's strengthening. So we've seen AUDUSD lower early this week, both because Australian dollar weakening, but also US dollar relatively strengthening. US dollar safe haven, Australian dollar a risk currency. Okay, so we saw that early this week. But then over the past 24 hours, we've seen this plunge lower in risk currencies in here, a plunge lower in risk assets. And we can best see that if we go and look at, say, one of the European indices, and I'm going to jump in here. Let's go take a look at the FTSE 100 in here, for example. FTSE 100 got smashed to the downside yesterday, rolled lower earlier this week, hit to the downside, and we can also go back and say, take a look at the German DAX index in here. German DAX index significantly lower in here over the past 24 hours, and that's as we've had this rise in COVID-19 cases, particularly in Europe, but globally, but particularly in Europe in here, and that's seen as a real threat for more hospitalisations, and we're already seeing in here national and regional lockdowns throughout the Eurozone and in the UK. So certainly a more negative tone for risk in here. And also there's fading hopes, waning hopes in here of a US economic relief package the closer we get to the US election. And those have been keeping the riskier assets on a more solid footing. The hopes of an economic relief package, that seems to be fading. Alongside this surging cases and the lockdowns that we're seeing in Europe has shifted us to risk off. So we've seen this big sell-off in risk currencies in here over the past 24 hours. Australian dollar got smashed in here, reversed down through this uptrend line that comes from late September. Took out supports here at 70.92, 70.71.65, down to 70.53. What we call a dead cat bounce in here. That means the market's hardly bounced. We have a tiny bounce and the market fades already, and we're looking for a pushback lower, maybe to challenge 70.53 today, and potentially then today, but probably more likely going into next week, maybe down to this key low in here from late September at 70.02. Now a breakdown through there would then re-energize this whole bearish theme that we saw through September, and we could see a much deeper move lower going into the second half of October. And similarly for the Kiwi dollar, not quite so negative in here for the Kiwi dollar, but the New Zealand dollar in here also rolling lower in here over the past 24 hours. Now the critical level for the Kiwi dollar is some way away, still down at 64.86, about 1.5% away, but certainly looking more negative in here than we have been over the last few days. The last few days really is the other markets were rolling lower. Kiwi went sideways, probably on hopes in here that we have remember the election in New Zealand over the weekend. There are real hopes in here that we see a first majority government for multiple decades in here for the Labour Party, and then that will give them the power and the strength to potentially push through more significant economic relief packages for New Zealand, and if that did come through in here, then we would obviously see the RBNZ maybe back away from what they're looking at the moment is potential for negative interest rates. And so if we get a better economic relief package, if it means the RBNZ move away from their very dovish position, that would be beneficial for the New Zealand dollar. So the New Zealand dollar not quite as negative as we're seeing maybe from the Australian dollar in here. So we've seen a more significant sell-off in here over the past 24 hours, however, but not as negative as we've seen elsewhere. So the election is going to be very significant. It's going to be, it's going to be notable in here over the weekend, and see the reaction to that. But equally at the moment, with this dollar strength that we're seeing coming through across the board as a safe haven because of the COVID-19 concerns in Europe, because of the waning the waning possibility, the fading possibility of a economic relief package in the US. We're seeing this risk off theme, and that does leave the threat lower for Kiwi dollar. And finally, I'm going to go to the Canadian dollar in here, and it's a similar, similarly to the New Zealand dollar. The Canadian dollar just sitting right down here near the lows in here throughout this week, but we're seeing this significant push higher in here. So if I zoom out in here, significant push higher in here for dollar CAD. That's US dollar up, Canadian dollar down, remember. So this again is risk off, Canadian dollar losing ground in here over the past 24 hours. We're just broken above this little down trend line in here, and that leaves all the threat now to the upside. 132.60, 132.89 on the upside in here. Small base being put in, and again looking for dollar strength to come back through Canadian dollar weakness. So overall in here we've had a definite shift in tone over the past 24 hours in here. We were already getting the signals of that earlier this week. It's kind of been confirmed in it by currency markets and equity markets. Now the US equity market did dip and had a very strong rebound, so that's going to be key in here maybe for the next 24 hours. But overall this shift to more of a risk off theme certainly points to the risk currencies, the Australian, Kiwi and Canadian dollars in here, AUDUSD, NZDUSD and USDCAD, all seeing strength of the US dollar and weakness for those three currencies. I'm going to leave it there, guys. I'm going to wish you all a great trading day. I'm going to say please be safe out there. Have a great weekend too. I'll be back with you on Monday for another video report.